Alright guys, happy Friday. Hope you had a good week, and we'll do a weekly recap here, and boy oh boy, did things get a little bit ugly. So today, the S&P 500 down 3%, the QQQ futures down 3%, the Russell 2000 with a 3-piece, and the Dow Jones down 3% as well. So 3 pieces across the board, and then if you look at the semiconductor sector, semis are down 2 and change. Big tech was down almost 3%. Transports down 2.5%. Financials down 3%. And then even energy down 2.5%. So pretty sloppy stuff there. And granted, I haven't been trading the indexes. I haven't been really focusing on the indexes too much as of late. What I am a bit more focused on, is what's going on within my watch list and the setups that we have in the watch list. So I will show you a little bit of that, but keep in mind here, guys, I think we can short the S&Ps. I think we can short the QQQ, the semis, the financials, the transports. We want to be careful getting short down here at -2 ATR. Doesn't mean we're not going to trade lower. Just not typically the spot to load the boat on the shorts. And then if you look at the put-call ratio, the P-call, put-call ratio gets a spike up here to 1 today, which basically means everyone and their mama is getting short. So does all of that mean that we have to get a bounce next week? Not necessarily, but I do think if you can get a bounce in the S&Ps, the Qs, big tech, the semis, basically almost everything, it will set up better short entries. But real quick, guys, I'll show you what we traded here this week. I'll show you our open positions, and then a little bit of what I'm going to be focusing on before I jump into the scans here, getting ready for the week ahead. So let's see, this week we took profits in Aflac. So we bought the dip here in Aflac, and we took profits a few days later. But notice how quickly it fell apart. All right, so one thing I'm noticing is there's a lot of failed breakouts, and there's a huge lack of continuation to the upside, even out of good-looking setups. So we took the small profits and we ran, thankfully. We took profits on one of our trades in Oxy, on that push towards 64-ish, and we're still holding a few trades there. We took profits this week on Costco. So Costco, we bought the dip to the 21 EMA. We took profits the following morning on that nice pop towards 2 ATR. So profitable trades in Costco, Aflac, and Oxy there. And then I'm going to show you a few trades from last week. Last week we took profits in Raytheon, but I show you this to show you it came right back down. So good structure, good setup, but no follow through. We had a trade last week in SLB, which we made money on, but we're getting long at the 21, taking profits on the pop, and there's not much more left. So one thing I'm noticing here, guys, is even with the good-looking bullish setups out here, a lot of failed breakouts, not much continuation. So the name of the game in this market, for the upside and for the downside, you want to take your positions at the 21 EMA. You want to take profits on that pop to the upside. So if you look at Costco here, again, just as an example, we took home about a 40-45% return on that pop into 2 ATR. I think in this market you don't need to look for much more because we're not getting the breakouts. We're not getting the follow through. So until that changes and we start to see more breakouts, we start to see more follow through, I think you want to take the entry at the 21 and take your profits on that pop, and then be ready to quickly cut them loose if they break your rules. So we had to cut loose Pfizer earlier this week, and we took that off on the flush there under the 21 EMA. It's about a 20% loss. We had to take the L in U.S. Steel. Again, perfect setup. Tries to break out, fails to break out. So we took that off for about a 25% loss. And then we also had to take off CCJ this morning. So another example here. We bought the dip on Wednesday. Going into the close, we were up like 70% on our calls. No breakout, no follow through, and it gets a little bit sloppy here today. So a few winners, a few losers. But check this out. One thing I want to show you before we jump into a few things I think you should watch here next week. Let me pull this up here real quick. Alright, here we go. So I know a lot of y'all have seen the buy signals and the sell signals in my charts, and at this point, guys, it's all I'm focusing on. I'm only going to get long the setups that have the buy signals, and I'm only looking to short the setups that have the sell signals. Anything else, none of my business. So we've been working on this indicator, tweaking it a little bit, and pretty much at this point, in the mastery and in the options room, I'm basically at the point here where I'm going to roll out as many trade alerts as possible on these setups because they're clean as hell. So since mid-February, when we kind of had the indicator solidified where I wanted it, let me see, 48 trades, 36 winners, 12 losses. So a good frequency of trades, almost 50 trades over the course of, let's call it 8 weeks and change. Obviously, a good win rate, like 75, 80%, and it's a good mix of shorts and longs. More importantly, look at the names I've been trading. So the green is a win, and the red is a losing trade. We're trading Uber, Comcast, Snapchat, the energy stocks, Altria, ADI, ANET, Amazon, CCJ, Raytheon, SLB, Aflac, Costco, GTE, DoorDash, Oxy, things I've literally never traded before. You want to focus on the setup and not the stock. So for those of you in the mastery, we're going to roll out way more trade alerts. Again, I'm at the point where these work. Right? It's basically the setup I've always had success with, but making a few tweaks here, even in a difficult market. 75, 80% win rate. Wins are bigger than the losses. Really good stuff. So before we jump into a few more things here, guys, for those of you interested, I am doing a webinar this coming Wednesday where we'll talk a little bit about what's been working, what's not working, adjustments I've had to make as far as, taking debit spreads versus credit spreads, and then we'll kind of dive into, these indicators here. So be sure to check that out. I'll make sure we got the link in the description. But with that out of the way, in terms of open positions, we still have some Oxy. Right? So we still have some Oxy. We've got a long position in Kroger, which holds up really well today compared to the shit show in the market. And then we've got a short position in Nike in the mastery, which we put on today, and then we put on a short in the options room on FedEx. And the short side looks good here for sure. So also this week, we made about 40-50% on a DoorDash debit spread. And I've also got a short on Uber, which looks pretty good here. So we've got FedEx short, we have got the Nike short, we're long Oxy, we're long Kroger, and I do have a put credit spread here on gold, which just kind of looks alright for now. But in terms of what to focus on next week, I'm going to run the scans here tonight. I'm going to go through everything top to bottom. So in Sunday's video, I'll give you an update as far as, hey, here's the actual watch list, or at least a few names from it. But in terms of what I want to focus on, as far as the short side goes, I don't want to short down here at minus 2 ATR. So, the semiconductors, I'll short them on the next bounce, ideally into the 21 EMA. And I'll look to short the S&P 500 on a bounce back to the 21. The QQQs, I think, are shortable. The small caps are shortable. The financials are shortable. The transports are shortable. So again, we'll go into the short side in a lot more detail in Sunday's video, but the major theme I'm seeing right now is the ship is kind of sailed as far as a good entry, so we'll get them on the next bounce. But then as far as the upside goes, what was interesting about today's session is we've had weakness in big tech, we've had weakness in the semis. We saw our first glimpses today of weakness in some of the commodity stuff, a lot of the stuff that's been leading the way here. So I'll show you a few things we had to take off of our watch list. One name that's off of our bullish watch list is healthcare. We got sell signals, so we had to take healthcare off the list here today. And really, if you look at healthcare, it's kind of UNH and Johnson & Johnson, where everything else looks pretty shitty, like Pfizer, ABBV. So with a break of structure and a shift in momentum there, no longer looking to buy the dip in healthcare. We also had to take XLB, the material sector, off the watch list today, at least for now. Nucor, New core still looks pretty good, but then there's NEM getting whacked here today. There's US Steel, which got a little bit sloppy. So for the time being, XLB not going to be the biggest focus. Then there's the energy sector, which we've covered, basically like in every video for the last month to 2 months here. Next week's going to be a big week for energy. So for EOG, Devon, Oxy, all that stuff, the level I think you should focus on is going to be the weekly 8 EMA. Right, this is your momentum moving average, and the momentum started back here with that push off the weekly 21. So to the extent this can continue to trade above that weekly 8, you could continue to get more upside. If the 8 EMA breaks, there's a growing probability we're going to come on back home to the old weekly 21. Not the pullback I want to sit through. So it's going to be an interesting week for energy. From my perspective, it's a big level there. So when you look at our Oxy, same rules. Everything is intact here if that can hold the weekly 8. If it loses the weekly 8, it could get a little bit uglier. So we're going to be ready to cut that one loose. And then if you look at the consumer staples here, very strong compared to the entire market. So for now, we would still look to buy the dip in XLP stocks. Altria, still very strong. Walmart, very strong. Pepsi, not too shabby. There's Procter & Gamble, there's Coca-Cola. So I would say for now, as far as a sector, XLP definitely holds up the best. We traded Costco earlier in the week. We'd probably buy it back above the 21 EMA. But there you have it, guys. Kind of a quick recap. Sloppy stuff. Really no other way to put it. So in this market, take the easy money, take the base hits. If you're getting long, make sure you're getting long good trend and good structure. Not your favorite stock. Same thing to the short side. And I'm going to jump into the scans here, put my head down, and a few hours from now, I'll have a nice watch list that I'll share with y'all on Sunday. But there you have it, guys. For those of you in the trading rooms here at Simpler, good work. We've been trading really well. A couple small losses this week, but in the options room, I think we had an 8 or a 9 trade winning streak. We're trading really well in the mastery. So, is it an easy market? No. But with the proper adjustments and the willingness to play both sides, so we're jumping into Nike today. We're shorting that. We're shorting DoorDash earlier this week. We're shorting FedEx here today. Buy signals and sell signals. Really good opportunity on both sides there. So we'll talk a bit more about the signals here in Wednesday's webinar. So I hope to see you all there. Otherwise, enjoy the rest of your night. Take your dog for a walk tomorrow, and I'll see you on Sunday with the weekly Watchlist video. Talk to y'all soon.